The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. As usual, we posted the charts of the DAX and the FTSE, and boy, those markets are certainly different. The FTSE's had a really strong, well, they both had big rallies, but you can see from the FTSE, it just made it up to the 78% level, whereas the DAX has already exceeded that previous high. So I think that we're probably going to see volatility like we've never seen before. Now, last night I had 2 emails pretty much asking me the same thing. Is this the top in the stock market? Folks, that's not my job. I don't know if it's going to be a top. I don't know where we're going from here. All I do is look at patterns, and we're having volatility like we haven't seen in a long time. We had this volatility in 2000, of course, but we haven't seen it in a long time. During 2008, it went very quickly down from 2008 into the bottom into March of 09. It was basically a one-way a flying Melinda all the way down to the bottom. So this one's, I don't know what's going to happen here. All I'm doing is looking at patterns. Now, what I did do today is, and I'll give you my 2 cents worth. And believe me, if you pay more than 2 cents, you pay too much. Here's what I'm looking at today. Here is the NASDAQ, folks, since November the 4th. Let's get it up here so you can take a look at it. All right. Here we go. Here's what we are here. You'll see that the 78% retracement came in at 11,536. Now, we missed that by 15 points. Now, it's not uncommon to go down and hit it again. All you have to do is to go look what happened back when it hit the 61% retracement. See how it hit it exactly? And then rallied 300 points. Or 270 points. So, this is a really key level here at 11,536. So, pay attention to that. We're trading at 16,000 and change right now, but pay attention to that. That's going to be a 1.618 expansion, and it's also going to be a 78% retracement. That's all I know. I don't know any more than that, but it's still pretty good to look at those numbers. That's the main thing. Now, let me try to share with you the way I understood what was happening yesterday, because I started seeing, I was up pretty much the last couple of nights and looking at this stuff, and fortunately the trading gods were on our side. But take a look at this E-mini S&P here. You can see I marked the box in there to show you when it started to happen, which was around, I think it was around 6:30 or 7 o'clock in the morning yesterday is when they came out and said, it might have been a little bit earlier, whatever it was, it exploded. It left a gap there, but these futures, they don't show a gap when you do the charts in, but it left a gap of 15 handles. And it went all the way up to 36.70, and then we dropped. There was up 100 and then down 100. You'll notice that we are now trading below the time of the vaccine stuff. See, so folks, I think the vaccine is a great news. It makes a really good indication. But I'll tell you one thing, boys and girls. Now listen to me very, very closely here, okay? There ain't no way in Hades that I is going to take that vaccine. Nebahachi will not happen. Okay, anyway, let's move on here. For many reasons I can't explain here. Anyway, let's just take a look here at some of these stocks that are really, really rocking and rolling, and they've led the party all the way up, and these are the FANG stocks. Now, they've been the leader, and now they've stopped being the leader, so let's just take a look at them here, folks. You'll see here we got a potential double top in Softy. That looks very, very interesting, doesn't it? Now, the next one we're going to look at is one that should have been, can you stop and think about this for just a moment, okay? Knock on Any Door by that was one of my favorite movies, Knock on Any Door. That's where the Navy SEALs, John Derrick starred in that, where he played a private detective, and his favorite quote in there is, "I never go into a room not knowing how to get out of it." And that's the way you should figure you're trading, folks. Don't ever put a trade on that you don't think you can get out of, because then you're trapped and you don't want to be happening. But look at this, folks. We've got the Dow Jones up yesterday, 1,600 points, and Netflix gaps down 10%. Shut the front door and raise it. What do you think that stock's trying to tell you? I mean, that's not a very, very positive stock. I don't know fundamentals, but all I can tell you is when you got the stock market up that much and the stocks don't move, something is not. That's it. Yeah, Art Cashin, he's my old buddy. He's the oldest living member of the stock exchange that's still down there trading. So we'll see if that's it. Okay. I don't know anything about pandemic, slamdemic, whatever, Denick. I don't really pay any attention to that. The news is beyond my pay grade. Now, let's take a look here at Google. Let's get up here and take a look at Google. The reason why I'm showing you these, folks, because these were the leaders, and they're not going to be leaders anymore. You can see we made the big ABCD there, and we missed it by $10. I mean, that's not very far away. At that 1800 level, we got this 1805. It was supposed to go to 1837. That's pretty much spot on. So that one has made its position. Okay, made its what do you call it? Can't even remember the name of the word. I'm a little tired. Hold on here. Now take a look at the big one. This is the really important one today, folks. I'm just going to give you my 2 cents worth, because take a look here. Now, yesterday, with all the news, you'll notice that we had a $121 a share high in Apple. That was a 61% retracement of the high in October the 11th. Exactly 78%. Now look where we're coming into today. We're trading down around the 114, 113 level, and at just a little below 113, we've got a 61% pullback. So we need to pay attention to Apple today, because if the market's going to turn, it's going to probably need the help of a few of these big guys, and Apple is the biggest of the big. So we want to pay very, very close attention to that. So those are the things that I'm looking at to see what's going on. Okay, let's move on here a little bit. You guys just can't let up on that. Hold on just a second here. Let's take a couple more. Let's look at the beast from Brazil. Put Amazon up. They're under problems with over in the EU over there. You notice we've had 3 lower highs in Amazon. This is with the stock market going straight up. So there's another reason to say, yep, some of these things have probably topped for the big guys. So, and some of these have been way up in the air. So you've got to pay very, very close attention to them, because when they start giving up the ghost, and when they stop giving up the ghost, they're going to be giving a lot of it back. And you don't want to be in the way of that should it happen. So let's remind ourselves of that. Now let's take a look at the old Facebook, excuse me, 1 second here. Just a minute. Technical problems. Broadsword to Danny Boy. Come in, Danny Boy. Market feedback. That's what I'm looking at, Marshall. That's it. You're the man, Marshall. God love you. Give Lynn my regards. Okay, you'll see we had another ABCD pattern complete up there at the 78% level in Facebook. So all of those stocks, every single one of them, all 5 have been showing signs that of at least a top. Now, whether that's a top in the market, not important. We'll be back to talk about gold. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted a chart of the gold. You can see up there at that 1960 level, that was a 50% retracement. The high, I think, was 1963, I believe, sometime Sunday night early. And then, of course, you see that it had dropped $112 so far. And I believe that we are just in the beginning stages of this, folks. If you look what happened when the first break occurred after the high, which was made there at 20,900, we dropped all the way down to 1878, folks. We dropped $200 in 4 trading days, and we dropped $112 in 1 day. So I don't know if it's going to continue like this, but we've taken out the lows of October at 1848. And so that tells us that we most probably are going to go lower. But there is a key to this. And one of the things that you look at is you watch to see, and I've talked about this many times to my students and stuff like this, that you need to watch the 382 retracement, because that's the key to whether the market's going to change trend or not. Now, it's not right all the time, but it's right a heck of a lot more than it's wrong. And what you've got to do is to try to figure out, how to use it. And the best way to use it is to sell at the 382 and get out of it if it goes above the 61% level. And that level is usually much, much smaller than what the ABCD level would mean. So that's something to look at. Now, another market that is paying close attention to this, and we're going to be covering more and more of this in the newsletter for next year, because John Jameson is getting more involved with me, and we're going to be doing some great things together. As a matter of fact, what I did this morning was post into the den here the article from our Trade What We See newsletter from October the 11th. And what John was showing here was the fact that the Russell at that time, October 11th, was at its lowest level in 20 years on a relationship to the S&P, which means that, it was probably way, way oversold, which what it was. Remember, all higher waters raises all boats. And that's what's happened, because now the Russell has caught up and it's made another high. We had a high from 2015, and we had one from 2018, and now we've had this other one up here around this 1700 level. So we're in an area, and I don't know if it's a higher, I don't know if it's a top or not, but you don't really need to know that, folks. You're trying to find trading opportunities. That's what it's all about. You don't get extra credit on your equity run that says, look, gee, I had the high tick. The number of times that I've had highs and low ticks over my career, yeah, there's been some, but you're talking 1959. Even the blind hog's going to pick up a acorn once in a while. But, you don't really need that. What you need to do is to try to find something that looks pretty good. And that's it. Now, another one that's very, very important here, folks, is the Treasury bonds. I've mentioned that over and over again, and I'll just bring it up one more time to remind ourselves where we are here, because we are heading down. And let's just get this up here. We've already posted this a couple of times, but we've now broken the key 170 level. We've broken below that 170.10 level. So, we're pretty much in a downtrend. Now, the $64 question is do we accelerate today, or do we finally get a little rally going in the Treasury bonds? They're very, very oversold, and whether that's going to happen or not, I don't know. Now, here's something that you might pay attention to today is, I do this artificial intelligence stuff, and I have seen on the major markets that I'm looking at today at 10:30, folks, right 10:30 down. That's going to be in 1 hour and 8 minutes. Watch to see what some of these markets are doing at 10:30 to 11 o'clock, because that's a very, very interesting spot where a lot of things should be happening. Now, I don't know whether anything is going to happen or not, but remember, when it's right, it's really right, and when it's wrong, you get out and stay out of it. Here's what was happening in the S&P last night, just to give you an example. In the European component, you can see here that we were down there at 35.12. We went all the way up to 35.60, and then went all the way back down to 35.10. So, we're having great volatility. So pay attention to 10:30, folks. It means a lot. And one of the stocks that you want to watch very, very closely at that time is Apple. And the price you want to watch is around 113. I don't know where Apple is trading this morning or not, but all I know that's a place where time and price squares up. And it's going to be interesting to see if it actually holds that level. Would someone in the Tiger Den be so kind just to tell me where we're trading in the Apple right now? I'd like to know if we're above 115 or below one. Yeah, we're above 115. I didn't want to see that. I wanted it to be below 114. So at 10:30, that might be a high in Apple. So don't get involved with it if it's making a high, but if it's making a low, that might be something to wet your whistle with as far as try to take a little bit out of the market. So we'll watch it here right now. I need to, since we're coming into the opening of the market, I want to check prices for just a second, so bear with me here. We're trading at 35.30. We're trading 100 handles higher than I want to be in the NASDAQ. I wanted that NASDAQ to go down and take that 115, 116, 11,600 level out one more time, and then that would be a spot where the market would be extremely oversold, and that would give you a really good chance to make it work. Now, here's what I'm going to do now, just to show you what I'm talking about these numbers, and I'm not just making them up. And we'll just bring this up here to show you. Now, this is the Treasury bond market here. It's a 2-minute market of the DES bonds, and you can see there at 10:30. At 10:30, it should be making a low, and that low should be right around, you'd like to see it at, the ideal number would be at 169.13. That's down a half a handle from where we are right now. So at that point, you don't have to risk more than $500, and if it's correct, it could be up for the whole rest of the day, and that could give you a solid lead. We'll follow this one through tomorrow, because sometimes when these things work, you've got to understand why they don't work. But the key level there is at 10:30. In fact, it's in so darn many things that you really have to pay very close attention to it. Same thing in the gold market, same thing in the crude oil market. And since we're talking about crude oil, but we got a break coming up here pretty good, I'll spend the time. I'll put the chart up for the crude, and you'll be able to see it up here. But I want you to see something, folks, just to see how these markets repeat. Here is the crude oil chart. Now, just take a look at the next one, which is the FTSE chart, and look how they look almost exact. Well, they are exactly alike. I mean, here's the FTSE, okay, and the other one was the crude oil. So let's get the crude oil back, and when we get back from the break, we will be talking about the crude oil because it's got a chance here to have a pretty significant top up here at this 41.30 level. In fact, that was the high yesterday, and we'll see if that's going to mean anything. But if you have any questions, it's 877-927-6648, and I'll be happy to answer them for you if I can. And I don't know where it says that the music should be starting, but nobody's telling me that, so we'll have to wait a little bit, and we'll not to worry about it. Well, don't know.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted a chart of the crude oil and also the FTSE to show you that they're pretty much the same charts, even though they're different things. But there is very strong resistance up there at that $41 a barrel. In the crude oil, it's very, very important that if we get above that, folks, it could really go. And there's a lot of reasons for it, of course, but one of the reasons, of course, that it's been pretty strong considering all this other stuff that is held up during this time. So if we get above 4,100, that means that we're attacking the 4,350 Fibonacci retracement level, and that is one that you don't want to. If it gets above that, why it would get above there, I have no clue. But if it does, be very, very careful being short oil. But right now at 41, I think that is a play for a move down to the downside, and pay attention to that number because it's very, very important. It's lower highs right at a beautiful 786 retracement in that crude oil. That's the one we talked about yesterday on the air at 41.30. The high was 41.32. Now, regarding yesterday, several people have asked me that, we were talking about the market, the key time of the market was going to be at about 10:30 in the morning, and that I wanted to be able to show you what that meant. And let me get this up here. That wasn't 10:30 in the morning. It was, I believe, at 9:30, whatever it was. Anyway, I'll post a chart here. This is what we were looking at yesterday in the S&P. The red line, of course, is the predictive AI line. And you'll notice there at the top there, when it's trading at the 382 level at 36.30. In other words, the market had come down from 36.70 down to 36.06. Believe it or not, that's 64 handles. And then rallied up and stopped exactly within 1 point of the 382 retracement, and then went down to go down to 35.88. And then the next key time of the day was around 12:30, and as you can see, it was making another 382 retracement, just a little bit, lower than the other one at 36.19. The high of that rally was 36.23. So risking just 7 points. That had over 60 handles in it on the way down. So when I'm looking at these when this program is looking at these key times, folks, it's like a tuning fork in time. It has absolutely nothing to do with price. Zero, bupkis, nothing. You have to look at what the exact time is, because it's like a tuning fork, and you're grabbing that tuning fork to keep it from vibrating, and that's when the market will change trend. Now, sometimes when you grab the tuning fork, it's like a hot potato, and you're going to get burned. So that's why you put in and pay close attention to these next four letters, folks. STOP. Stop. You have to put a stop in there, because if you're wrong, you're going to be wrong, and you don't want to be giving them any more money back than you absolutely have to. And you're not going to be right all the time, but you're going to be right some of the time. And that's the whole key to what we're watching here. So we've opened up here this morning. Let's see how the trading gods are moving the old NASDAQ up. We're now 200 handles above the 61% retracement, folks. You might think that's good, but it isn't. So that's my 2 cents worth. Anyway, let's get here and look at this NASDAQ. Here we are here. And I really wanted that thing to get down there one more time. The little rascals. Hold on just a second. They do this a lot. So let me print this so we can see this darn thing here. We're now trading at 11,775. I think I just saw. 11,750. So that's a key one to pay attention. The S&Ps at 35.42. Folks, if you like these numbers that I talk about, the one number that you really want to pay attention to, we missed the first one in the NASDAQ by about 10 points, but you really need to write this one down if you like patterns and ratios and Fibonacci. 35.70, 28 handles from where we are in the stop and P right now. And watch that one closely, because that is going to be a big one. That's where the 300-day moving average exponential 5x35 crosses the 125 moving average 4x8. And when that happens, that is really something quite exciting to happen. So watch 35.69, 35.70 in the stop and P here today to see if we get to that level. That's going to be a real key number to look at. All righty, now we had one question about the gold. Folks, I'm looking for gold to possibly go to 1760. I was originally looking at 1810, but since we came down $110 on the first day, I think we're going to go down at least another $100 from that last high. That was at 1960. That would take us to 1760. 1760 would be a giant ABCD, which we cover this in the newsletter this week. It'll be a giant ABCD on the weekly from the low that we made back at 1,030 way back in December of 2016. Remember, that was down from the high that we made at 1932 in August of 2011, and we dropped basically in half. And what did we do? We doubled. We went down in half, and then we went doubled. So it's doing what it's supposed to be doing. And at that level, it's going to be a monster ABCD, and that'll be the spot where you want to be watching to buy it. And I will promise you this, there won't be two bulls on the planet, be me and probably Mr. Z, but I'll tell you, that's what it looks like to me, is that we got a chance for something really big to happen. And with all the stuff that's going on with the Fed and the election and the world events, these things could easily move. In fact, we've got, the blockchain stuff that's also out there. And the fact that the Bitcoin did not go down with the gold dropping $100, I mean, that's a sign of strong support in these things. It's overdone right now, but we'll have to pay close attention to it as we walk through this maze of things that we're looking at today. So remember, 3570 in the stock in the stock market for the S&P, and on the downside, if we should get down to this level right here, which is not very far away, if we get down to the 3,500 level, that will be a key level to watch, because that's a 78% retracement of the low of November the 6th, okay? And it will also be an expansion of 1.27 of the last day's range. And that's another one that makes it interesting. But right now, we'll see whether it's going to go. Look at this, folks. This NASDAQ, it's got to be, I told you, when these things do this, these algo traders got to be absolutely 2 French fries short of I have to post this, because this is really something. Hold on just a second here. I have to put this one in here. Love these numbers anyway. Oh my goodness, look at the old drawing tool just didn't quite catch what I wanted to do. So give me a second. There we go. Now we got it. Now I'm going to bring this up here just to show you, if you like Fibonacci numbers, and I know some of you do, we'll just move this over just a tiny little bit here. Hopefully we'll get it posted here, and you'll see what happened to the old NASDAQ. Hit the exact Fib number, 11,750, and it's dropped 100 points, but it's taken about 6 minutes to do that. So if you like 6-minute moves, take it. Watch that 1030 level, folks, at 1030 and everything. It's a big, big number. That's an hour from now. There's going to be a lot of things happening, and we'll see what's going on. I don't know what Jimmy means if I'm on a roll. Oh, thanks for the heads up. 877-927-6648.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direxion shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit DirexionInvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, let me get this up here. This is from yesterday's show, but I wanted to remind you that this NASDAQ, we made a potential major double top up here because during the time when the Dow was up 1,600, the NASDAQ was basically down on the day, ended up quite substantially lower. But you'll notice that we up at that 12,480 level, it was pretty much a double top. We're now trading 16,350. Remember, the low last night was 11,540, and the 61% retracement is 11,536. So remind yourself of that number because this thing jumps around a lot. As you can see, what's happening this morning in that just little short burst of 1 hour, what it's done with the big ABCD patterns and stuff. This volatility, I think, is here to stay, folks, because look where we are. We're not trading at 1,500 in the Dow. We're trading, or 15,000. We're trading at 29,000. So we're going to see some tremendous swings. And unfortunately, that's when patterns really work the best, is when you got so much action going on. And I hope that continues because that's what we're looking at anyway. So let's remind ourselves that these markets go both ways. And yesterday was really quite spectacular because I happened to be sitting here getting ready for the show when I saw the gap in the S&P, and I said, oh my goodness, I thought maybe something happened from a political or something like that. But when I turned on Bloomberg to see that it was regarding the vaccine, I said to myself, now we're going to see a lot of information going through here. So it'll be interesting to see what's going on. But boy, they milking that thing for all it's worth, folks. But we'll just move on to the next subject to keep putting myself from my foot in the mouth. Let me show you this chart right here, folks. This was the one that we were looking at going into the newsletter this week, that we really had a high probability of the market being higher this week because everything was pointing higher. If you looked at the Nikkei, if you looked at the Hang Seng Index in Hong Kong, all of those, the Chinese market, they were all pointing up. They had, gap after gap just heading higher and higher. Dudette, why do you think I'm drunk? I'm not even taking medication. Oh, that hurts my feelings. Guess I'll have to have a glass of wine. I hate to make a liar out of you. Huh, no one's ever said that to me before. What am I doing wrong? I'm doing what I can. I better shut up. How about if I answer some questions? Oh, Al tells me that the line is all full, so you can't call in at 877-927-6648 because there's too many people trying to get in right now, but we'll see what's moving on. Okay, regarding that SPY chart, that was pointing up. Everything was pointing higher. That's it. It's pretty much I was joking about the moving averages, Dudette. I hope you realize that I don't use moving averages because they're both moving and they're average. And I believe that in order to be successful in this business, you have to be just a tiny bit above average. And that's what I try to do, is just say, I love you. Thank you, Maria. Sarah says hi, by the way. Okay, let's move on here to one other one that someone's asked me about. Just give me 1 second here to get it ready. And I still believe that we're getting ready for a pretty significant correction in the grains. I haven't got the signal yet. I'm still waiting for it, but we should get it in the next few days. We're watching it, very, very closely as we see these things unfold. Now, when you see something like what happened in the Dow Jones yesterday, folks, let me get this up here just to remind you that what you saw yesterday, okay, this is the S&P, okay? Look at this. This is what that red box is, what you call an outlier event. When the S&P goes from 3550 to 3670 in a matter of about 3 hours, okay? Well, 3 hours, okay? That's an outlier event. The number of times you see something like that is very, very rare. You'll see it more on the downside than you will on the upside. And the reason for that is that fear is a greater emotion than greed. You can actually measure fear. You can't measure greed. Greed is complacency. Look at the fear, and look what in the fear in the market here in the gold market yesterday. Holy cow, Mr. Z got in the room. What's up, Bubba?
Good morning, Larry. Has my call gone through?
You were lucky to get in, pal. You just made it by a fifth of a second, so you're ready to go.
Excellent. Thank you. Say, I wanted to ask you a question about the bean and grain markets.
Yes.
In the context of a USDA report that comes out today at noon.
Yes.
Specifically, Larry, I extend a request. If you're able to accommodate, great. If not, certainly understandable. But my request is that you speak with both Rich and Simonly, if possible, in the next week or two, and answer the following question. Of the farmers that both deal with, the farmers have had a very nice benefits of having wheat, corn, soybeans, and cotton prices all rally since August, right into harvest. And so, of course, if you're a farmer, you're out harvesting things in the field. You've had the option of taking the crop off the combine and going right to the grain elevator and selling it in the cash market, and being able to do so where here in 2020 you've had a profitable operation. And of course, between March through August, farmers were facing dreaded, what's the word I'm looking for? The dread of woes, or woe of dread, with prices being so low and unprofitable. Okay, that's the background. Given that there's been lots of farmers selling off the combine during this price rally into harvest, the question I've got is, have a great number of the people that Cy works with or Rich works with, have those farmers rebought those commodities in the futures market on the idea that, hey, I sold my crop and it's profitable here in 2020. But it looks like the supply-demand balance is tightening significantly, so that I want to capitalize upon further rally. And, of course, Larry, you and I have both been witness over the years to farmers doing just that, selling off the combine, and then what is known as re-owning the crop via the futures market in hopes of gaining actual further price appreciation. So that's my request, if you could consult with those two, and I'd be much obliged in you passing that along if you can.
I certainly can. There'll be a cost associated with that, but you can send me a check like you usually do if you don't mind, okay?
Exactly right.
I love you, buddy. Thanks for calling in. We'll have Rich on tomorrow to discuss the report.
Thanks so much.
877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to bring up the chart of the Japanese yen. That's one of those patterns that lined up just absolutely perfectly. Also, on a note, if you remember last week, we were talking about Trader Tom, the fact that he had a bad day being down 760 large. I'd like you to know that yesterday he made all of it back plus another 25%. So that's the way he trades, and that's the way it is. He'll be joining me for my full day session on the 19th of November here, along with Jim Twentyman, and we're going to have some fun talking about the old days and trading, mainly trying to make some money like we usually do during these days, and we'll be using the AI then that day, just to give you folks a idea of, what's coming in the future with artificial intelligence. I've checked with Rich this morning. Rich Anderson will be our guest tomorrow. There's a big report today in the grains, folks, so you don't want to be doing anything in the grains unless you've got a lot of capital behind you and make your stops work. But the good opportunities coming in tomorrow after the close. There'll be some really good ones that we could probably capitalize on, but we have to wait for that. Remember the key levels that we talked about here this morning. 10:30 in another half an hour. We should see some really big volatility with maybe even some reversal action in some of these. And we're watching particularly the Treasury bonds. We'd like to see them below the 170 level one more time. If we could get them to do that, that would be really good. Also, I posted a chart of the natural gas. You'll notice that we've come down to the 78% level down there at the 280 level. We're now at 295. So we're just starting a little bit of a rally, but we're keeping a very, very close eye on this one because this has potential for long-term implications because of the new administration and the fracking and energy and all those other things. So live every day in an attitude of gratitude, and may God bless. And try to do something nice for somebody that has a whole lot less than you folks. And there's a lot of dudes and dudettes out there that are, not keeping up with the curve. So we'll see you all tomorrow with Rich Anderson as our guest, and may God bless.